Good afternoon, everyone. Thank you for joining us for our 2014 State of the Industry webinar. This is Jonathan Sweet, the Editor-in-Chief of Boating Industry, and I'll be moderating today's discussion. Today we're here to share some market intelligence and data with you, and we've got 4 great experts to do that. First will be Vicki Yu from the National Marine Manufacturers Association, Peter Houseworth, Director of Client Services at InfoLink, Noel Lays from Spader Business Management, and finally we'll have John Burnham from Dominion Marine Media. Each of them will speak for a few minutes, and after they're done, we'll answer your questions. And you can submit those at any time through the module on your screen. You'll see a little drop down there in the GoToWebinar control panel where you can answer your questions, and we'll try to get to them as quickly as we can. A little note, today's webinar is being recorded. That will then be archived on the boating industry website on the next couple days, so you can either, if you want to go listen to it again, share it with your colleagues, whatever it may be. And this webinar is, of course, the companion piece to our annual market data book, which is now available in the digital download section of our website at boatingindustry.com. And with that, I will hand it off to Vicki to get us started.
Thanks for the introduction, Jonathan. And I will leave a copy of the webinar, and the slides will also be available to all attendees.
Vicki, I'm going to interrupt. Vicki, can you hear me?
Yeah.
I'm going to interrupt you for a second. We're having some audio. It sounds like we're having trouble hearing you. Are you on a speakerphone by any chance?
I'm not. Is this any better?
That is better. Thank you.
All right. Sorry about that. Let's get into some data. We'll be going over trends that I'm seeing in the overall economy. Next slide, please, Jonathan. We'll be going over some trends that I'm seeing in the overall economy, how it relates to boating, how it sets the stage as we head into the fall show selling season, and we'll close with what we're seeing in the export markets and the opportunities there. The economy is expected to pick up in the second half of the year. Labor market outlooks have generally improved, and consumer spending remains strong. Buyers are cautious about what they spend on. While GDP and employment are not where we'd like them to be ideally, things are heading in the right direction. GDP is expected to rebound in the second half of the year as businesses replenish inventories, and we started to see that already in the initial numbers for Q2 at 4%. That said, federal spending and net exports continue to be a drag on GDP, and general consensus is that we'll end the year with growth just below 2%, and the forecast is expected to pick up in 2015 to 3%. Next slide, please.
Yeah, Vicki, I'm sorry. I'm going to have to interrupt you again. I want to apologize to the attendees. We tested the audio before we got on, but obviously we're having some issues. I'm not sure what's going on, Vicki, but I'm having trouble hearing you. I'm hearing from several attendees that they can't hear at all either. I don't know if we've got a bad connection, or if we could, if you want to try calling in again, we could maybe skip to Peter's presentation and come back to you, if that would work for you. I'm not sure what we've got going on.
Sure.
All right, so sorry about that, folks. What we're going to do is we're going to go ahead and skip over to Peter Houseworth, who is our second presenter, and we'll have Vicki call in again and see if we can fix that audio issue. Let me go ahead and do this on the fly here. We'll advance real quickly to Peter's presentation. All right, Peter, please go ahead.
Okay. Do you have any better luck with my connection, or is it universal?
Sounds like I'm hearing you fine, so hopefully it'll be okay.
Okay, great. Good afternoon, everyone. We wanted to thank Boating Industry and all of you for attending. We put together basically just a few observations that we could do in a 15-minute time window. We basically have broken down into 3 different areas that we'd like to provide some observations and commentary on, and then one additional area as more food for thought. Go ahead, Jonathan. This time of the year, it's always kind of, I guess, expected that we're going to take a look through June and see how this year is panning out and provide some commentary there. Next. We wanted to also put in a different lens and take a look at some of the longer view and look at some of this information in a little bit different way that might lend some interesting perspective as well. Next. A few comments regarding consumer purchase patterns, specifically as it relates to new boat buyers. Then lastly, and this falls under the food for thought, is female boat buyers. Do we have potential, untapped potential there? Next. If you look at the chart, it's, we're gratified and a long time coming, but we've got basically 3 years in a row where we've got some positive momentum, and even though if you look at 2013, we probably had a little bit of a squeaker, but we're optimistic, so we'll call that a win. So it's good to have a little bit of wind at our back finally. If you look at the far right-hand column for the 12 months ended through June of this year, the industry grew at about a 13% rate, which it's been a long time since we've seen that. Within that, we include PWCs. If you exclude PWCs, the growth rate is closer to 9.5, which is still respectable, not frothy, but certainly respectable. Looking at the different components of it, up in the top, you'll see the outboard segment. Outboards are really benefiting from basically across the board improvement. All of the different boat categories within outboard propulsion types. Hello? Hello? Jonathan, can you hear me?
Peter,
Jonathan?
Yep, I can still hear you. Go ahead. You should.
Oh, okay, because I couldn't hear. Okay, basically all of the different boat categories within the outboard propulsion type have been performing relatively well. I mean, obviously, pontoons are leading the way, but it doesn't matter. Saltwater fish is looking good. Freshwater fish is looking good. Even runabouts, which has not been particularly strong within outboards, they're actually doing okay. Next down is basically PWCs, and we've got some interesting dynamics going on there. It's really taken off in the last year or so, and we got a combination of factors there. It's really a function of scrap rate and a shorter life cycle for PWCs overall, and the aging of the fleet that's gone on. And we expect this trend to continue as this fleet will need to be replaced in more significant volumes going forward. The other thing that's in there as well is the introduction of Spark from BRP. Apparently they've hit the mark with something there, and we're seeing some very good results, and that provides a little bump as well. Stern drive still our kind of weak area. It's still declining, but even within that, when you start breaking down, looking at some of the different manufacturers, there are companies that are finding success within that segment, even though the segment overall continues to be challenged. And then lastly, inboard, which basically includes both towboats as well as larger inboard yachts. Most of this action that we're seeing is related to the towboats, which is showing a decent growth trend. Next. I wanted to break out two of our brighter spots and explore those a little bit further. If you're looking at basically this chart, the blue is basically the pontoon market, and the red is the towboat market. So it gives you some kind of a feeling for dimension in terms of scope of the size of those two relative segments of our industry. Looking at the pontoon market, it's been phenomenal. Even 3 short years ago, when you were sitting at 27,000, this year For at least the last 12 months, we're up in excess of 40,000 units, which is pretty remarkable. We expect that to continue for at least some time, although we've got numbers working against us now, just so the percentages just becomes harder and harder to lift. So there is some of that. To the extent that you're in the pontoon business and or sell into it in supply chain, we have some interesting metrics that that we've developed that can probably provide you with some advance looks. I mean, when things are going well, it behooves one to look in the rearview mirror every so often. So to the extent that that you are in that business and or rely on the health of that particular segment, feel free to drop me an email or give me a call, and we'll provide you with what that is. It's more than just unit volume went down, and it is predictive in nature. Lastly, towboats. While obviously it's smaller, it's showing some very significant acceleration here recently. In talking to some of our contacts within that segment, there's more of this to come. This is still in its early stages, so we've got some more bright expectations there. Next. Changing the lens, basically what, rather than focusing on unit sales, what this does is it basically looks at composition. So we basically broke everything down into the main categories and said, okay, what percentage of total sales, irrespective of volume, what percentage of the total market did that segment represent? We started this with looking at 2008 versus 2013. So obviously, freshwater fishing is doing relatively well. We always run into this. I mean, the pontoon, everybody's been talking about it. When you look at this, the pontoon versus runabout, many people have postulated that this is just a conversion of runabout to pontoon boat ownership. And in actuality, when you peel it back, it's not just that. What we do is we go in and we look at the people who are buying those pontoon boats and ascertain what is it that they owned before they actually bought that pontoon boat. And what we found was that basically all of the components, so there are people going from freshwater to pontoon, saltwater to pontoon, from ski to pontoon, and vice versa, as well as runabouts to pontoons, but those proportions haven't changed. And basically pontoon boat owners, pontoon boat buyers also have a higher component, and that's not new either. It's about half of pontoon boat buyers are actually first-time boaters, but that proportion hasn't changed. So while it's tempting to look at this and say, well, it's just it's a trade-off of one for the other, the fact of the matter is there's just less demand for runabouts. The other thing, go ahead, Jonathan, is that this is, while we've been focused on it, this trend is 10 years old. Jonathan, go ahead. This has been in place for 15 years, so this is not new. It's rather interesting to see that pontoons, which were relatively about 12% of the market, it's now fully 25 and probably in excess of that, even more recently. So that's a very interesting change, and it's something that is very long-term in nature. In addition, there's also backstories here. I mean, you can go into saltwater fish where basically, okay, it's maintaining its relative proportion within the market, but clearly the boats are getting bigger, much more powerful, things of that nature. And also with the ski industry, that's an interesting one too. What we call towboats now is the way that particular segment, while it has gained a little bit in terms of its total representation, it's actually it's morphed because it's gone from ski to wakeboard and now wake surf, and all of these things have been necessary, and the industry, that segment of the industry, has been very good about and very aggressive on product development and driving the market in that way. Go ahead, Jonathan. So this is how that, and further to that comment is, we looked at some of the consumer behaviors, and the behaviors are basically identifying new boat buyers. So we took people who purchased a new pontoon or a new towboat in the last year, and we looked backwards and said, okay, how long has it been since they last purchased a new boat for that same household? So it's not it's not it's not 30, in the case of 36%, it's not 36% will purchase within 3 years. It's of all the people that purchased, that had previously purchased a new boat, it was within 3 years. So here you can see, just how strong the towboat segment is in terms of moving new product and getting it into the stream and being devoured by its customers. I mean, if you take just within 6 years to say 53% of those ski boat buyers who are going to buy another boat actually do it. That's a really quick turnaround. By contrast, pontoons are much more regular, kind of process. And I think what this also suggests is that staying in touch with your new boat buyers, particularly up through that 9-year window, is very important as you're rolling out new product and developing new things and all that type of thing. So next. I won't spend long on this one. It's basically the same thing. We just looked at fresh and salt water, and all we noted there was that basically, they perform very similarly. I would have expected that freshwater boats would probably turn not quite as quickly as saltwater boats, just given that they're only used, the majority use them, for half the year or thereabouts, and saltwater tends to be more in year-round markets and things of that nature. Next. And lastly, cruisers and runabouts, they operate pretty much the same. So there's nothing particularly compelling there. Just there are clients that do actually purchase multiple new boats within a relatively short period of time. Next. Under food for thought, this really comes from the need for us to seek and explore how we are going to get more people involved in boating. We seem to have isolated, and we've got some actions in place to address minorities, which is an excellent thing. That's great. But one of the other things that we noticed in our information is basically the lack of penetration among females. We looked at this basically 13%, so ownership among female buyers. So these are just new boats, and we, it's basically remained fairly stagnant. Now that's going to include just female head of household as well as the female registrant who happens to be the principal registrant. But suffice to say that it's relatively low. Next. We also looked across these boat types to see, okay, is it more common? And basically, there the only thing that we noted is that more if you look at the top categories, those are tend to be more general recreation. Tends to be a little bit more popular with females versus fishing, which is less popular. Next. So one of the things that we noticed about this population is that obviously 50% of the U.S. population is female, but and more particularly in that prime boating range. So if you age range, so if you accept that, okay, this is when people have free time, resources, so on, it tends to happen more frequently in this age range. The interesting part about that is that we don't have to wait for them. Some of the minorities and some of the other developments, Gen X and all the other X, or all the other generations that we're looking at, we have to kind of wait for them to reach this area. But there's a very significant population. There's 42 million women that fall in this category, and interestingly enough, 40% of those actually fall outside of that married spouse present. So if we said, hey, look, fine, we accept that it's a family orientation, and yes, their mom's going to be the registrant on the boat. I think we don't necessarily need to ignore that, because there are also, with the changing dynamics, there are also households out there where the female is the adventurer. Dad wants to watch sports on the weekend, and mom's out doing triathlon. So, I think there's reason to explore there. Next. And then lastly, I think some of the work that the NMMA did, which was excellent, was looking at the correlation with early exposure to boating. We have no reason to believe that, and many years ago, it was much more of a family activity even, and that perhaps we have no reason to think that females versus males, that females were never exposed to it, and therefore it's a tougher sell or anything of that nature. So we wanted to just raise that as a potential discussion point, perhaps in some further investigation. I mean, there's no silver bullet here. I think any of these initiatives, all of these initiatives, should be explored and pursued, because we don't, I think the more eggs we can spread around and try different concepts to get our industry growing again, I think the better served we're going to be. That's it for me. Back to you, Jonathan.
Great, thank you. Vicki is back on the line, so I'm going to go ahead and bring her presentation back up and get her, hold on, get her on there. Vicki, are you there on the line with us? Vicki? Perhaps not.
Hello?
Oh, okay, great. I'm bringing your presentation back up, Vicki, and then we'll have you go ahead and give it another shot.
Yeah. Does this, am I coming through okay now?
Yeah, you sound better, thank you. Get you back to, I think it's, all right, there we go. Go ahead and let you get going again.
All right, great. Today we're going to talk about 3 main points, and we're going to talk about what I'm seeing in the overall economy, how it relates to boating, and how it sets the stage as we head into the fall show selling season. And what we'll close with is what we're seeing in the export markets and the opportunities there. The economy is expected to pick up in the second half of the year. Labor market outlooks have generally improved, and consumer spending remains strong, but buyers are cautious about what they spend on. Certainly, GDP and employment are not where we'd like them to be ideally, but things are headed in the right direction. Next slide. GDP is expected to rebound in the second half of the year as businesses replenish inventories. And we've started to see that already in the initial Q2 numbers at 4% growth. That said, federal spending and net exports have been a drag on GDP, and general consensus is that we'll end the year with growth just below 2%, and the forecast is expected to improve to 3% in 2015. Next slide. These are net jobs added to the economy monthly, and for the past 6 consecutive months, well over 200,000 jobs have been added to payrolls monthly, and we've also seen a steady pickup in manufacturing jobs up from March. Unemployment rate are relatively low at 6.2%, although the participation rate is also at more than 30-year lows, indicating that there's slack in the labor markets. Janet Yellen had referenced this in her discussion on Capitol Hill earlier this summer. Good news is that there's increased optimism among manufacturers and small businesses to increase hiring plans over the next 6 months. Next, please. Disposable income increased for the 6th straight month in June, and we've been seeing an upward trend in the savings rate in 2014. Meanwhile, we've seen a slowdown in overall retail sales in the summer. So while consumers are still spending at a modest pace, they're more cautious on what they're purchasing. Next. We also look at consumer confidence as it correlates highly with boat sales. Consumer confidence reached a high in July of 80.5. Last time we were at that high was back in October of 2007. Wholesale shipments have closely followed. Shipments rebounded in the summer from weather-related softness during winter through the early spring, but was relatively unchanged compared to levels a year ago. Next slide. Housing starts also trend closely with boat sales. Housing starts rebounded in July on numbers released yesterday to their second highest pace since the recession. Existing home sales also improved for the third consecutive month, topping 5 million in June, with inventories at its highest levels in more than a year. That slightly eases home pricing pressures. Similarly, we can expect powerboat retail sales to pick up in the second quarter. Next slide. Spending on boats grew to a recovery high $37 billion in 2013, and the latest numbers through July indicate powerboat sales will be up 8 to 10%, led by ski boats, small fishing boats, and pontoons. We expect the year to end with powerboat sales up 5 to 7%. In 2013, sales were up 3%. Take a look at the black bars on the chart. That's spending on accessories, which has been steadily increasing over the past 3 years, and at $5 billion in 2013 was the second highest total on record. Next slide. Can anyone spot the 3D image in this slide? Only kidding. Boating is a $37 billion industry with nearly 16 million boats in the water today. That includes 4 million, our estimates for 4 million undocumented vessels. Next slide. Participation is at the second highest level it's been since we've been tracking this stat. Nearly 4 in 10 adult Americans took to the water in 2013. Translated to current population estimates, that's nearly 89 million people who participated in boating last year. Next. Revenue from new boat sales neared $8 billion in 2013. That's up 11% from 2012, with gains spread across nearly all categories. Next slide. New boat spending in 7 of the top 10 boating states grew in 2013, with growth rates ranging from 1% to 19%. Florida remains the top-ranking state in new boat spending, followed by Texas, Michigan, Delaware, in that order. Next. There's likely pent-up demand that we can translate into boat sales as we head into the fall show selling season. We've seen both confidence and housing starts improve. Labor market outlooks have been better than they were 6 months ago. We've seen double-digit gains in sales across some segments, and innovation is another growth proponent, which we've seen translate into sales in the personal watercraft segment. For example, with innovation in design and pricing strategies, that's translated into that segment being up 25% through June. Exports are another area that we can dig into a little deeper. Next slide. Recreational boat and marine engine exports rebounded in the second quarter, partially offsetting earlier declines. While exports have improved lately, import growth continues to outpace export growth. That's similar to what we're seeing in the broader economy, where net exports have been a drag on GDP for the past 2 quarters. With that said, there's still opportunity for growth overseas. Next slide, please. The latest PMI data for July indicates that 9 of our top 10 trading partners are growing. Canada is our largest boat export partner, followed by Australia, Mexico, Spain, Italy, in that order. Numbers under 50 mean contraction, and numbers over 50 mean expansion. If we looked at this graph at the end of 2013, the picture looked very different, with 3 of the top 10 countries in red. Next slide. Lastly, we estimate there will be 1.6 million boats retiring over the next 6 years, which could mean opportunities for upselling or selling a replacement boat. Next slide. Today, we covered 3 main topics. In general, the latest reports on the economy have been positive. We're seeing a positive trend of more than 200,000 jobs added monthly. Confidence is at a high. Housing starts are up, which contributes to inventories and lower home prices. New boat sales are up, and we're seeing a rebound from winter-related softness. Participation is at a high, with 89 million Americans taking to the water last year. Sales are expected to pick up as we head into the fall show selling season, and to end the year up 5 to 7%. Exports turned up in the second quarter, and 9 of our top 10 export markets indicate that there's opportunity for growth. And with that, I'll pass it back over to you, Jonathan, to introduce the next panelist.
Great, thanks, Vicki. We are going to go ahead and move it over to Noel now, and I'm going to go ahead and advance to his presentation here. We'll skip through Peter. Thank you, everyone, for your patience as we kind of rejigger things here. All righty. Noel, you should be ready to go.
Thank you, Jonathan, and thanks, everyone. Good afternoon, and thank you for being participating and for allowing me to be a part of today's presentation. What I'd like to focus on today is the dealer metrics, the numbers that we're getting from our marine dealers. This is all volume of marine dealers all over the U.S. and Canada. I want to start it by taking a look at last year. So this is a slide that represents the new boat sales over the past 10 years, actually since 2003. And you can see, as Peter mentioned, the good news is we've had 3 years of increased new boat sales. So that's very positive. The third straight year in a row of the boat sales increase. And looking over the whole 10-year period, it's the fourth highest in the past 10 years. So that's very positive. If we look at the next slide, that's a representation of our new boat inventory. And so you can see that our new boat inventory has increased each of the last 3 years, which you would expect. In a period of rising sales, we have to have additional inventory to cover those sales, so you would expect that the inventory would go up. The question is did the inventory go up in proportion to the increase in sales? If we look at the next slide, the metric that answers that question for us is new inventory turnover. How are we turning our inventory? And you can see, if you look at the far right, in the year 2013, our new unit inventory turnover, after reaching a high of 2 in the past 10 years, it dropped a little bit in 2013. So that's an indication that inventories built up at a little higher level than the pace of our sales at the end of 2013. And of course, inventories are something that we think is key not only to the margin of the units, but also to the overall profitability. If we get too much inventory, drives down margins, and then in turn drives down the profitability of the dealership. If we look at the next slide, this is a summary of the margins on the new unit gross margins, and you can see what they've done in the last 10 years. The significant thing that I wanted to point out here is one, margins did dip a little bit in 2013 from 2012. So, and we know if you're a marine retailer, there's a lot of pressure on margins right now, and so we saw a little bit of a decline there. And if you compare 2010, 2011, 2012, 2013, those last 4 years, overall, compare those to the 2003, 2004, and 2005, overall margins in this 10-year period on new units have declined by about 1 percentage point. It's tougher to get those margins. So with the additional margin pressure, more important than ever that we have our inventories in the right place so that we don't have aged inventory also driving down those margins. The last piece on the next slide for 2013 that I wanted to take a peek at is what happened. You know, bottom line is really the bottom line. Are dealers making strong net profits? And if you look at this slide, 2013, you can see that the average net profit of the marine dealer in 2013 declined from, in 2012 we had a 10-year high above 4%, about 4.1, 4.2%, and in 2013 it dropped down into about 3.3%, which at Spaders we believe is what we call survival net, or the minimum net profit that a marine dealer needs to earn in order to stay in business. So the challenge for 2014 is, can we recover that that profitability? So now I'd like to take a look at how 2014 rolled out. And to do that, I picked some of those same metrics, and I began studying those and looking at those in May. So we all know that the marine industry is a seasonal business, and for many of our clients, it's really the month of May before they get into what we call the key adjustment period, the 30 to 35% of their seasonal trends. So that's why I started checking these numbers in May. So we look at our inventories. If we compare May of 2013 to May of 2014, we saw the same trend that we had at the end of the year, where new boat inventories were higher than they were a year ago. If we look at the next slide, this is new boat sales. So the lighter green bar on the left is May 2013 compared to May of 2014. So if we look at this, the new boat sales for this May were lower than they were a year ago in May. And so as I went to my 20 group meetings in May and talking to the dealers, many of them were experiencing this, and the common consensus was that was weather related, largely weather related. And many dealers had a wet spring, and it was cool, and the season was slow to take off. If we take a look at the final May slide, the next one, then that's the profitability that we saw this May compared to last May. And what we're seeing there is lower sales resulted in lower profits through May. So I was very anxious to see what happened in June. The next slide, in June 2013 compared to June of 2014, our new boat inventories again were higher. Next slide, the new boat sales in June increased over June of last year. And so what many of our clients were saying, wet spring, cool spring, was a slow start to the season. We saw that probably was the case for many of the dealers, because June made up for many of the lost sales that they had early in the season. But if we look at the next slide, again, the overall profitability, the average dealer, even though sales increased in June and surpassed last year, the average dealer was reporting less profit in June of this year than they were in June of last year. So finally, I want to take a look at the next slide, and those are the July numbers. And I want to point out that this is preliminary, because today was August 20th, and we have probably about half of our dealers reporting at this point, and so still subject to change, but it's still a good base. And so in July, what we're seeing, same trend, new boat inventories are still higher than they were last July. Next slide. Our new boat sales, the good news is July of 2014 was significantly higher than the year-to-date July of 2013, so that's positive. And then the next slide, our profitability, and again, good news, the profitability for July of 2014 increased. It surpassed the profitability that we had in 2014. And in terms of, it's important to point out in terms of dollars. So this is reporting the dollars of net profit and loss. In percentages, as a percentage of sales, it actually was very, very close. The net profit as a percentage of the increased sales was almost identical. But because sales dollars were up, the net profit was up. So that's very, very positive. What's the net result is that I think we need to continue to monitor the inventories very, very closely. We're seeing a lot of positive signs, as Vicki mentioned and Peter mentioned, a lot of positive signs, but I think the word that I would describe it is fragile. We saw in the main numbers how a wet spring and a cool spring can significantly affect those retail sales, and there's a possibility, and we don't know what the fall sales are going to be. So my recommendation to our clients is to keep monitoring your inventory levels very closely. Watch the margins, where our margins are somewhat lower than they have been historically, and if that's the case, if we have to sacrifice less margin now than we did 8, 9, 10 years ago, more important than ever that we achieve the proper inventory turnover. We're also enjoying right now very, very low floor plan interest rates, and historically low floor plan interest rates that probably we won't have forever. And so the recommendation is be cautious, watch your inventory levels. They seem to be increasing. If I look at the July turnover, July 2014 turnover, it's slightly lower than July 2013. So that tells me inventories are still creeping up there at a little higher pace than what the sales are, even though sales are higher this year. So the watchword is be careful, be cautious, monitor those inventories. Jonathan, back to you.
Great. Thank you, Noel. We're going to go ahead and hand it over to John Burnham, who is our last speaker of the day. And just a reminder, if you do have any questions, please go ahead and submit those through the GoToWebinar control panel. And John, you should be ready to go.
Okay, how's my audio? Can you hear me? Okay.
Yes, we can hear you. Go ahead,
okay.
John.
Sorry. In Boating Industry's data book issue, the report from our soldboats.com database of brokerage boat sales was that despite weaker sales in 2014, sales were up 4% for the 12-month period that ended on May 31st. That was fine, but for 2014 on its own, sales have been lower, and after June and July, they are down 5%. So we're asking, why, with the economy improving, are brokerage sales 5% behind last year? Next slide, please. And as has just been mentioned, the weather, we think, has been a factor. In March, we pulled this report showing the states that experienced the largest drop in January and February brokerage sales. And it clearly shows where storms were severe, places like the Carolinas and Georgia, sales are way off. It was a tough winter in the Southeast and the Northeast, and in Minnesota too. Next, please. Looking at the first 3 months of the year, we compared volume against 2012 and 2013. And no doubt there were other reasons. The orange line is below the others, the orange line being 2014. But if you think about commuters stuck in blizzard conditions on a Georgia highway in February, it's not hard to understand why some of them weren't rushing out to buy brokerage boats. Next, please. Another view of this is this regional sales snapshot, which is taken from our data book contribution. This covers the 12-month period ending May 31st, and it shows the relative weakness in our biggest sales region for brokerage boats, the Southeast. Between Florida and its neighbor states to the north, it's been a tough year for volume sales so far. And just looking at Florida for the first 7 months of 2014, we find that brokers have sold 4% fewer boats than in 2013. Notably, they have sold more bigger boats, but they haven't sold as many small boats, which is where the volume comes from. Next, please. So as I mentioned, when the data book was published earlier this month, annualized sales through May 31st were up 4%. Now, I thought with the improving economy and improving weather, the orange line representing 2014 on this slide might meet the one above it from 2013 sometime during the summer, but it hasn't happened. Clearly, something else must be going on. Jonathan, can you flip to the next slide, please? Thanks. Listening to what brokers were telling us about their inventory, we did some more research and found likely reason number 2 for slower sales this year. This graph, by the way, represents the age of the approximately 127,000 boats listed on Yacht World as of July 31st. So recessions hurt us when they happen. They hurt our businesses, but they also have a memory. And there's supposed to be a mountain of 3 to 12-year-old inventory for brokers to sell. And while there's clearly a mountain there, you can see on the left side of it what a big chunk the 2009 recession took out of that mountain. That missing chunk of inventory, boats that were never built, should now be in the prime selling years at 3 to 5 years old. They're just not there. So to compound the issue for brokers is the fact that most of the boats in the smaller peak on the far left, boats built after the recession, which are just a couple years old, those are by and large small boats only. Clean, recent model brokerage boats above 35 feet are extremely hard to find. In that size range, you can find plenty of boats 7 or more years old, but they're not quite as desirable and they're selling at lower prices. By the way, if you look way down the right side of the mountain, you can see another deep valley. That's courtesy of the early 90s recession and the ill-fated luxury tax. Still with us after all these years. Next, please.
Real quick, John, we did get a question from the audience here on what time period this data is from.
It's about a 40-year spread on the x-axis there. So the top of the mountain, the highest point is about 7-8 years ago, just before the recession. So then in the middle of the slide, slides all the way down to the early 90s, and then we're, before that we're in the late 80s, and the far right would be earlier than that.
Great, thanks.
So here's one more view that probably reflects on the age of the fleet in brokerage sales. The number of days that it takes to sell a boat is increasing. During the recession, and as late as 2011, that's the top line, or the line that reaches the highest peak there, it was taking a long time to sell boats. But an improving economy in 2012 and 2013, which are the darker lines at the bottom, brought the average time to sell a boat down into the 260, 270 day range. Now, as indicated by the orange line, average selling times have risen again into the 270, 280 day range. Age of inventory seems like a probable cause. Newer boats may be selling relatively quickly, but the ever-aging bulk of the brokerage fleet is pushing up the averages. Next, please. Now here's an interesting twist that's appeared lately. Even as the volume of sales has fallen among smaller boats this year, average prices are rising by 5 to 6% among boats shorter than 35 feet. Even among 36 to 45 footers, there has been a 3% gain in average sale price. Average values aren't lower than in 2013 until you get up to the 46 to 55 foot range. And there, conversely, we're seeing volume growth. The fact that there have been a reasonable number of smaller boats built since the recession could be a factor in this trend. For me, this is an area I want to look into more. Next, please. So here's where the brokerage market stands year to date. Sales are down by close to 1,000 boats. The total price paid is down by 180 million. Yet if we remove superyacht sales from the equation, next slide please. Instead of a decline in value, we see that the total price paid for brokerage boats is essentially level with last year, hence the rise in average prices. Next. Before closing, I have a bonus slide that takes us out of the brokerage area. This is based on a project we worked on with Peter at InfoLink, which in the end surprised us a bit. We discovered that new boat shoppers are all over our sites, Boat Trader, Boats.com, and even Yacht World. They're doing research just like used boat shoppers, and they're sending email leads or making calls to dealers and manufacturers when they find a boat they like. Peter matched our lead data over the last 3.5 years with InfoLink's data and was able to see who had sent a lead from one of our sites and later bought a new boat. These are the makes that rose to the top of the list on a percentage basis. Clearly another area rich for study, and it's a reminder to all of us that regardless of whether it's our sites or your sites, new boat shoppers as well as used boat shoppers are online in force. Next, please. That concludes my slide deck. Thanks very much. Back to you, Jonathan.
All right, thank you, John. We do have a couple minutes left here, so I will forward some of the questions on to our panel and ask them to offer some insight here. If you do have questions, please go ahead and submit them through the control panel. First one here is we had one of our listeners ask about sailboats. We didn't have a lot of information on sailboats in the presentation. Anybody have any insights to the current strength of the sailboat market, any trends we're seeing there?
John, do you want to talk about that one, or?
Well, I can talk about the brokerage sales at the moment. Year to date,
the pre-owned market is very, very important in the sailboat market.
Yeah, in the inventory, there's still a lot of 20 to 30-year-old sailboats that still sell. Is one thing that we notice. The brokerage sales year to date are down 4%, so in line with the market overall. The valuation is similar, except there's been a drop off in the value for the very largest boats. But I'd say overall we're seeing with the aging of the baby boomers, we're seeing a continued decline in the total number of sailboats sold.
Great, and I'm going to go ahead and chime in. We luckily enough we have Ryan over at SSI who is listening on the call, and he just chimed in that their numbers are showing retail sailboats are down 7% this year. So thank you for sharing that information, Ryan. One thing, we did get a lot of questions about will the webinar be available? Yes, we will have the archived recording of this, so it'll be the slides and the audio will be posted on our website. It's at boatingindustry.com. It'll be right under the webinar drop-down menu from the home page, and that should be posted probably by it'll be posted sometime tomorrow, most likely. Let's see here. One of our next questions, someone asking if you guys have any, Vicki talked about growth potential through innovation, so they're just asking if she could elaborate on that, a little bit more information on what you were looking at there, Vicki.
Hello?
Vicki, are you there?
Hello, Jonathan, can you hear me?
Yes, we can hear you.
Yeah, we saw some trends in product innovation, fabrication innovation, and Peter mentioned a little bit about the success of the new Sea-Doo model in the watercraft segment, and we're just seeing that translate very well into boat sales when we see that segment jump 25% in June. And there are other examples of innovation that we've been headlining in some of our press releases.
Okay. Another listener asked a question about housing starts that, again, Vicki, I believe as you mentioned, they are trending positively, but they recently read that the stat is skewed because much of the housing starts are actually apartment buildings and not so much individual homes and condos. Does that affect what you guys are looking at all? Is it single family starts that correlate well to boat sales, or what have you seen there?
We look at housing starts overall, and it's true that there is a lot of volatility when we're talking about multi-unit housing, but overall we've seen a positive trend in starts.
Okay. And we are actually just about here on 2 o'clock, so thank you everybody for tuning in today. And again, this recorded webinar and with the slides and the audio will be available on our website, boatingindustry.com. I should be there by the end of the day tomorrow. And I want to thank our panelists for participating in today's discussion. I hope everyone in the audience found it as educational as I did. Once again, this is Jonathan Sweet at Boating Industry. And on behalf of our panelists, I want to thank you once again for joining us today. Thanks, and have a great day.